Hey, good morning. You guys ready? Yeah, boy. Hang on, I gotta do... Hang on, I'm almost there. All right. I think I'm ready. I got to click this button over here. Okay, I clicked that button. Now I got to find the music. All right. I'll kill the music. There we go. So, hey, good morning, everybody. It is a Friday. The 11th of the 12th month. So, December 11, 2020. It's approximately 8 o'clock in the morning. Welcome to Forex.Today. We will cover what? Euro, dollar, peso, ZAR, pound. You know what? Let's do whatever you want to do. You're the boss. I'm the humble currency trader that will share some advice on technical and fundamental analysis. What do you stink? Smell like a plan? Let's go. So good morning, Facebook. Good morning, YouTube. Good morning, Twitch. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Wayne, are you going to do a webinar all December? Well, I'm going to take the weekends off, if that's all right. So, guten Morgen. Wow, it's getting crowded in here. It's getting crowded here. Now, look at that. It's just too much stuff. I got to clean that up. All right, cool. So, hey, good morning. My name is Wayne McDonald. I'm a currency trader. How about you? Oh, faux show. So, I love this thing called Forex. It's pretty cool. The best thing, I think, is it's mark to market. The leverage is cool. The taxation is great if you're a professional. There's a lot of things that are good about trading currencies. It's quite advantageous as a small business. And of course, as a small business, inherently, it's got, no inventory, no accounts receivable, no accounts payable. That's cool. So anyways, I've been doing this a while, getting close to 20 years. So if you have questions about how to do technical analysis, how to scalp, how to spot, how to swing, how to carry, how to position, we could talk about all those things, multiple time frames, fractal geometry, chaos theory. We can cover those things. Just Difference between a 5A cross and a 2155 cross. We could do that. We can do Fibonacci if you want. You can do pivot points. We can do price action. There's a lot we can cover today, so just let me know what you need. We can do relative strength exercises. Okay? Fundamental. Anything you want. Oh yeah, we can do some cryptocurrency. Well, our Bitcoin really. An XRP if you want. But anyways, what I'm trying to say is you're the boss, so let me know how I can help. Like I said, I've been doing this a while, and so you can share from my mistakes. You can learn from my mistakes, and you might be able to gain from a few things that I do right. So make sure you ask questions, write down what you learn, document that on the videos in the comment section below the video, and say, hey, today I learned about XYZ. Okay? So, anyways, I want to help, so this is why I'm here today. I'd like to thank Traders Way for being part of our community as well. Right now, their ECN accounts, I believe, are 50% off as far as the fees associated with the trading. 50% discount on your trading costs. So if you like ECNs, tradersway.com. Fill out the form, do an ECN account. Of course, I like variable accounts, so I take the VAR. Other people like fixed, especially if you're a scalper. You might like a fixed spread. It's your way at Traders Way. Cool. Hey, what about MT4? What about MT5? Yep, sure. And a few other things, I believe. But MT4 is good enough for the girls I go with. So thank you very much, Traders Way. Tradersway.com. The table is set. The candles are lit. Bloop, bloop, bloop. I've poured out the wine for you. Now fall in love, tradersway.com. So we have some questions here. One has to do with the pound. Yeah, okay. So I want to talk about that. First of all, I am happy that I exited the pound trades 3 days ago. Nice! So once again, it looks like they're not going to do anything for Brexit, so they're just going to, I don't know, keep talking about maybe talking. Hey, Hoodoo. Somalia. Very nice. Amazing channels. Yeah. Right on. Cool. Appreciate that. So, anyways, let's take a look at what's going on here. Yen is strong. Wah, wah, wah. We don't want that. Dollar's strong. Wah, wah, wah. Okay. But CAD is strong. Euro's strong. Aussie's strong. So maybe it's just the pound pulling this down so much. It's just simply anything with a pound on it is influenced by that weakness. Where did I get the bull and bear behind me? A little boutique shop called Amazon.com. Probably haven't heard of it. Yeah, Amazon.com. All right. So, anyways, yeah, so it's pretty amazing. How can everything be strong? And it's just the pound is so weak, I think. So, interesting. Let's take a look at commodities first. So if you recall, even a couple of weeks ago, yeah, going back to here, we were planning on, buying these dips and breaking through 45. So down here it was breaking through 45, coming back to 45, and then extending up to almost 48. But that's what we call price action, don't we? So there's two types of price action. Well, there's more than two types, but let's just say this is a macro. Okay? And these are micros. Okay? So one is a swing and the other is day trading. New Trader says because dollar is relatively strong and Japanese yen is very strong, should the Swiss franc weaken? Well, I know what you're saying because in the last year, let's say, it seems to us that when dollar and yen are weak, Swissy's been strong, so now should it flip? But again, I don't understand the fundamentals behind it right now. And that might be a good thing, that might be a bad thing. It just is, and therefore I'm not interested. So what you are saying is typically when dollar's weak, Swissy is weak. Or sorry, when dollar's weak, yen and yen is weak, Swissy would be weak. Yes, I agree with that. But for the last year or so, it hasn't been the case. So now would I start selling Swiss franc because I'm assuming an inverse correlation with the dollar and the yen? No, I wouldn't do it that way. I wouldn't do it that way. I know what you're saying, and it makes sense sort of price-wise. But again, if I don't understand the fundamentals, I'm not interested. Okay? See? I got to know why before I do anything. So anyways, this is us planning the up, this is us planning the up, this is us planning the up, and now we're way up. The thing is, do you think it'll do this next week? What you think is most important. Okay? Okay? And this will impact macroeconomics, this will, right? This will impact, well, Canadian dollar and Noki for sure, right? Zamo joined FX Bootcamp? Right on. Welcome to the team. It's going to be an exciting next year. For those in the swing trading group, I've asked now twice. I think I asked last night in the group and yesterday in this meeting. It seems to be enough people want to make the commitment for an annual membership. So I'll try to make that available maybe over the weekend. So I have to create the process and all that. But it's an interesting idea where I don't think anyone I don't think anyone would buy the annual membership simply to save money. I think what's happening is people want to commit for a year. So they're committing psychologically and emotionally to mastering, swing trading and they're, and such, and planning and learning more about seasonality. And they're doing it to ensure they don't wimp out. So I like that idea. So I'm going to try to do that. Peter says, Wayne, can you explain the zero lag moving average again? Sure. Okay. All right, so anyways, that's oil. That's a nice one. We want the ups on that, so that's good. Okay, here's your Goldilocks. So we can change this now and see what we see. Is this more helpful information? Yeah. What does this tell us? That we should be on our way to $2,000 an ounce. Okay, but you knew that 2 weeks ago. So the relevant information now is, can we do that in the next 3 weeks? Like, can we get to $2,000 an ounce by the end of the year, by the end of the month? Right now, we're caught on the weekly R1, monthly M3, and that tells us this could actually drop to 1,800 before it even thinks about going up. Okay? So, and we call that an inside week. So, right? So I hope we got enough energy to do what needs to get done. So we know bulls are going to buy it there, and we know bears are going to sell it there. That's obvious. So I know you know this. So, okay. So what I don't know, okay, is whether we're going to be down here or up here at the end of the month. Okay. Bulls on the first hour of the first day had their chance, right? And now it looks to me like this if I was a bull. So I have to put a couple of things into here. One, R1 top predicts S1 bottom. Okay, so that's down most of this week, which then sets up, let's change the color again, if I may. That sets up M3 next week to M1, but it would happen on Monday. Or at OOPs. So let's do it that way. So it does this, and then we recover, and then that's probably the week of Christmas. But then can we get above that to this area? No, probably not, huh? So, big question mark. Okay. You see, like, I want it to go up here, but I'm not sure it can. Okay. See, you have to understand, like, you know your bias, but we have to be cautious of other people's biases. So all we know is this. And we know bulls buy here. It's obviously a weekly M2, monthly M2. Nothing complicated about that, right? That's weekly resistance on top of the best selling monthly price. So right now we don't really know, and now we're at the weighted mean, and then this is probably the mean, and this is the weighted mean. So we're sitting on gold and we don't know anything, and there's nothing really to do today at these prices. You get that? Buying around 1777 is pretty obvious. Selling at 1877 is pretty obvious. And then there's nothing obvious about where we are now. Really what you should be doing is moving your stops, right? And just you're done. Someone's going to make money here and someone's not going to lose money. Okay? So anyways, this doesn't tell me much information. And that's why you can see, like, well, it might do this, but then it could do that. So maybe the tiebreaker here, I was going to say, is maybe we kick off of this, but it doesn't even look like that. So, doesn't even look good. So whatever. Maybe we're done for the year. Maybe double bottom. Yeah, but see, like, if you're trending up, which is what you're talking about, you wouldn't do that. Okay? So you have to understand why the patterns are happening. This is bearish. Okay? So a bull had an opportunity here. Pretty obvious. Shot in the dark. Hail Mary. High risk trade. Okay? And then the lower, this is a sell. Okay? This is a counter trend, but a clear, obvious counter trend that you would have known days in advance. Okay? And then this is the clear sell. So none of this from a bearish point of view says double bottom. It says lower low. Okay? $88 says, wait, you thought there was no trend? Depends on the time frame you're looking at. Okay? So, like, I could argue this is an uptrend. And then you're like, Wayne, no way, this is a downtrend, right? So it's your data set. It's what you're measuring, okay? So someone would look at it this way, and then other people could look at it this way. And that's the issue, right? So what is it that you're measuring? Well, if you're still, and I can pull this back even further, right? If you're a bear, the plan is this. It's just a swing trade. Well, in this case, it's a position trade. It's just a position trade. But it very obviously is one. Okay? So would I expect, because remember, it comes down to your expectations. If it dropped down to M2, would I expect a double bottom and then have it turn bullish? No, actually, I don't. Do you think a bull is going to be happy for a double bottom? No. Right? Do you think a bear is going to wimp out here? No, dude. They're going for this. You see what I mean? So you have to look at the psychology. Are bulls happy and are bears afraid? Not in that situation. So the only thing that a bull really has as an opportunity is this central holds, and it creates a step up. But then the next part of my analysis is, are we, if it did that, are we going to get here by the end of the year? And that's not what's suggested by this analysis. Of course, it could do anything, but that's not what's suggested by the analysis. It's supposed to be an arrow. Okay? So right now, the best hope here is this gets to, 1877. Maybe 19. Let's say 19. Okay? Which ain't bad if you bought it at 1750 like you should have as a bull. Now, this is a second opportunity, so you're buying it. It should be lower than 1850. So you're buying it at 1830 something, and you're going for 19. And all of a sudden you're like, that's not really that great of a trade. But, okay? Because bears have a lot more meat on the bone. None of this will tell you what to do. So you should be, you should trade what your bias is. Do you have an investment thesis? Okay. You bought at 1777. Okay, let's get in there a little bit. Okay. And here's the interesting thing. So it's not an amazing, it's a good trade. That's a good trade. Okay, so you bought down here. And when you buy down here in a downtrend, so you're buying a downtrend, which is higher risk. Okay? Not a bad trade, it's just higher risk. And you know where the challenge is going to be. You're going to be challenged here. So let's put this in blue color. You will be challenged here, and you will be challenged here. Okay? You know that. You knew that when you took the trade. So the issue is, now that we hit this and drop like a bajillion, how do you feel about your trade now? Have you at least moved your stop to break even? Okay? And then we look at the weekly, and we know this is R1, and we know that suggests S1, which you should already be out by that point for profit. So you're making these decisions down here, and it's sort of a delayed response. Because of this downtrend, you're probably better off more often than not taking your profit in here, especially if it shows signs of weakness like it did here. Okay? Up, stop, so it respected it. Up, stop, so it respected it. Up, stop, it respected it. Up, lower low, lower high. Holy schnicker-schnacker. So I think I'd like you to have been out up there. Now you're still in, and I think you're hoping, or you need to be hoping, for this to turn bullish, which I'm not entirely sure it's doing. If it's going to do it, it has to do it now at the market open. And you're playing next week, and then maybe it works out for you next week. And then I think you need to jam your stop pretty quickly. But if this does not work on the here and now, I think you'd just be giving all these pips away, hoping that it'll go up. And you can hope all you want. The analysis says it won't go up. Okay? You're at 1823. How'd you come up with let's see, 18, 20. Well, so you got knocked out, huh? Unless you just moved it. Okay. Unless you just moved it. So you know how to trade gold on the short term, right? You guys know how to do that. So we know, let me zoom in here, and let's change this to this. So we know around 7 a.m., so is this, okay, so that makes it, okay, right around here, right? We know right around here, if you're a bull, this is where it needs to start going up. Yeah, so just project it out to the 1382. Well, you can't do it at H&S unless you're at the top of a trend, and you're not at the top of a trend. So it would be more of a 1, 2, 3, and now we're splitting hairs. It's just I'm right and you're wrong. It's essentially the same thing for the same reasons, but I wouldn't say head and shoulders. I would say 1, 2, 3. Okay. Because head and shoulders only happen in certain circumstances. Yeah. No, that's all right. Like a lot of people do things like this, and I can't even do it wrong. How funny. How do you? Okay, they say that's a head and shoulders. That's one mistake. Or you get this. Gee whiz, I can't even do it wrong. Isn't it funny? Anyways, they typically see the pattern, and then they throw it down. So like maybe this is what you're talking about. But even then, you'd have to look at this, okay? It's the right idea at the wrong time in the wrong situation, right? It's the right idea in the wrong situation. So instead, it's more of a price action. And again, we're splitting hairs. I mean, it's just, they're so similar, but the psychology behind them is different, though. So you can't really call it that. But so, for example, I taught you guys a month ago. Actually, I gotta change this. I'm off, right? I taught you guys a month ago that if you were a bull, you would look to buy here. That candle. Right? You'd be ready, willing, and able to buy as a bull. Okay? Not this candle, not this candle, not that candle, not that candle, not that candle, not this candle, that candle. In here, you'd be ready, willing, and able to buy. How many people remember that video I did, a month ago on how to trade gold? I'm not even looking at daily M2. I'm not looking at anything else. All of that's nice, but that has nothing to do with the strategy I taught you. You would use that information, of course, but I'm blinding us of even that. I'm just reinforcing that you show up at the right time and do your job, or you're mediocre. Right? You do it right, or you'll suffer mediocrity. God forbid you'd be average. Average when 95% of people lose money. So you'd be in the upper quartile of average. So it would take you longer to lose all your money. Okay? Cool. So anyways, and then you add all that other stuff. But the thing is, you need to know you're going to buy. So the other part of this, guys, if this doesn't rally up, but instead does this in the next, hour or so, then I would bail on that gold trade if I was long at 1777, because it's probably, and that's what analysis is, technical analysis, you could rename statistical analysis, because you're statistically trying to look at the probability of the market behaving in certain ways based on patterns, but the patterns are really statistics. What's the standard deviation on this? What's the velocity on this? Right? You're asking statistical, right? What's the variance and what's the average variance versus our current variance, right? Are the moving averages converging or diverging? All these things are just doing statistical analysis to figure out the probability of this going up or the probability of this going down. So I'm like, if it is going to go up the rest of the entire month, it has to do it right here on these tiny little candles. And if it will, you got some hope to the upside. If it was down, I would take the walk. I'd get out. It's probably not going to happen. Doesn't mean it won't happen. It just probably won't. Right? And that's just technical analysis. So it's not my opinion. I want this to go up, but then I have to use scientific methodology based on facts, right? Which is tough. I have to use some sort of methodology to confirm or deny my hypothesis. Okay? As a profiteer, I'm a scientist. I'm an engineer. It's not about hope, about guessing what I want. Okay? Oh, Gary's been working on this method. Is that right, Gary? How long have you been focusing on the market open trades for gold? PPI at 1.4. Oh no, that changes everything. Yeah. Very cool. Jim says it's been a tough week. It's been ups and downs. So on those trades, I have 1,600, but remember I took 666 off, so 700 off. So that's 2,300, and I think the peak of this was 2,500 and some change. So by and large, this week, nothing's happened. Right? And that's the interesting thing about portfolio trading. If you're getting it all put together, and you started the week and then you end the week and you look at what happened, more often than not, especially if you have a balance, right? So I have some yen, some pound, I've spread it out over multiple trades. Then by and large, what will happen is you'll look at your trades and you'll, right? Let's say you only look at your account on Saturday. You open your account and you're like, what? Nothing happened again this week. This is like 3 weeks in a row, nothing's happened. Meanwhile, if you're intraday trading and you're spending 8 hours a day on your charts, you're like, oh my God, it's been up and down and sideways, and this news came out and pound went up 200 pips, and then the other news came out and pound went down 200 pips, and all this is going on. I'm like, oh my gosh. And then to someone else, you're like, gee whiz, slow month, nothing's happened, nothing. Right? So anyways, we got to work to somehow get both of those things together. And I guess this is not 100% true, because I have this 100 pip trade on the Aussie. And what I did is I got out of those 2 pound trades and then I added to the Aussie. So I'd really only be up 2,200 pips if I just left things as things are. But what are you going to do? Okay, Gary says, yeah, the 1, 2, 3 entry, almost second nature once you know it and you're starting to anticipate it. That's where you start sort of getting into when fun becomes trading. There you go. I love that. When fun becomes trading, it's because you're anticipating things before they've happened. So you're sitting there and you're like, wow, in the next 45 minutes, this is going to happen. And then sure enough, it does it. And then you go click, and then it turns and goes back your way. You predicted a down and an up. And you're like, this is awesome. It becomes fun. You're like, oh my God, it's awesome, right? It's not sort of it's not the trades or the profits and all that kind of stuff. I get joy out of two things as a trader. One, predicting the future and being right, of course. But the second part is predicting the future and being wrong, meaning not wrong in my behavior, but I predict the end of whatever, which is sort of part of the wrong, right? Like you've been long for hours or days or weeks or months, and then you get to this area and you know it's going to come down, or you've entered a beautiful trade and it's not behaving the way you want, which is another form of wrong. And so you make the tough decision, you do what's disciplined, and you're like, this isn't the trade that I wanted. I'm in the trade, maybe you're even profitable, okay? So if you're a little bit profitable, let's say you got 25 pips profit. I would move my stop to -3 and say, damn it, this is so slow, this is not working out, I didn't get the velocity, I didn't get the oomph, no one's trading behind me, so it's just like my trade is just floating out there on clouds and on the breeze of butterfly wings. And you're like, oh my God, this isn't what I meant for. So I'd move my stop to -3 because what I want to do is I want to remove the risk and I want to acknowledge that if this comes back down, it didn't work out. 25 pips is not a trade working out. Okay? Unless you want to just, not grow your net worth your entire life. You just want to work for minimum wage, right? 25 pip trade is minimum wage. It's not worth your time. So I'd move it to -3 and say, man, I got to acknowledge this didn't work. The next one is when it's losing money. And it's not a lot of money, but you're losing and you're like, this ain't working out the way I thought. Either way, you get out. And the follow-up to that is 3 hours later, you come back to your charts and you see a giant red candle. And you're like, yes! Yes! Because remember, when you took the trade in the beginning, you thought green. And then you're in the trade and time goes by and it's green, or maybe it's a little red, like nothing massive has happened. It isn't unbelievably good, it's not unbelievably bad, but you're in this minutia, this quagmire. You're in this doji. Quite literally, that's what doji means. A stick stuck in the mud that measures tides. So it's just, your trade is stuck in the mud. It's not going up, it's not going down. So you're like, you know what? That's not the trade I planned for. I'm going to move my stop, or I'm going to get out for the small loss. Never get out for a small win. It doesn't make any sense. Okay? So you get out for the small loss, and then what? You inevitably find out you made the right decision, and it feels so good to have prevented yourself from something bad. Now, making money, it's benign. Most of the time, if not all of the time, I guess most of the time, 90% of the time, your trading should be benign. Meaning, if you entered a trade, it was because you expect to make money. Agreed? Like, if you're not sure, why would you take the trade? It doesn't make sense to me. So I'm not sure how you base your trades, but psychologically, do you take a trade when you're certain to make money? So most of the time, you'll take trades and you'll make money. And you're like, it doesn't feel that great because A, you expected it. No, everything, FT9. I'm not talking about this. I'm talking about everything. Okay? You take the trade and you make money. Of course you made money. Like, to me, it's just like, the exits are more interesting. Because sometimes you're like, well, should I take the weekly exit? Should I take the monthly? Like, this is hard, right? It's not hard. It's difficult, right? But what feels good is making a decision that's difficult and then finding out, especially in situations of loss, that you made the right decision. That feels really good because you're in a trade and you expected to make money. Now you're not making money. You're like, well, how should I handle this? Well, I'd rather have a -3 than a -33. You see what I mean? -3's actually helped me because it's lowering my average loss. And it's maintaining my average win. Okay? And by the way, the reason I do it like -3, -4, -5, whatever in that area, most of the time I just drag the stop. So it might be -7 even. But I just move my stop closer, right? The reason I do that is the worst case scenario is you put your stop -1 and you hit it, but then it slips or bounces or whatever, and it pops up and you get knocked out at +1. That's the worst case scenario. Because now you got all your winners averaged out. So you go like 300, 300, 300, 300, 1. What's the average win? Whoa! You just killed your average win from averaging 300 to suddenly, wow, right? Way lower. So you don't want that either, right? But the exit, the exit is because, the exit is more intellectual because it comes down to a lot of different things. Mostly why you bought it in the first place. Okay, why you bought it in the first place almost always determines where you exit. Now, there are situations like you bought at a weekly M2, monthly M2. Okay, that's a bit of a challenge. Maybe the time of the year, the particular month would matter on that. I would behave differently in March than I would in September or October. So you're like, But here's the other thing. You can always get back in. Okay? You can always get back in. So that's how I kind of handle a weekly and a monthly. But if it's early in the month and I'm in at a monthly M2, weekly M2, I'd probably try to stick it out for the month. I'd go for the monthly target, but that takes some experience before you make those decisions, right? All right, cool. So there we go. Going back to this gold idea, that has to go up or the month of December is over. Do you like how we get it down to the exact 15-minute candle? And I hope we busted this down enough for you to see how mediocre the price is, okay? And how little hope there is. Like, I don't wish for you to be doing this stuff ever. Even though we just talked about it, like, if that's going to happen, then, there's the if-then statement, it has to happen on that candle right then and there. And if it doesn't, I'm out. But I don't want you to be trading like this because it's basically 50-50. And in fact, it's probably 60-40 down than up. So you're buying at the exact right time, at the exact right price, with only 40% probability of even getting this up into this, yet alone a new higher high. And probably even less chance right now under current market conditions to get this to 2,000. So I'm like, what is it that you're trying to do? Now, if you were going to be bullish, that was your best price of the month, and you should be done 2 weeks ago. You should be done the month of December. That's what I teach, okay? This is what we do in the swing trading group. This is a position trade, but it's a position in the wrong direction. So there's some fundamental bias to this. Of course, I'm negative on the US dollar. So that fits into that's right in my pocket. That's the exact right time, the exact right price. Textbook, take the shot, jam a stop, take a walk. What did you do in December? Well, on December 1st, I bought it. Then what did you do? Moved my stop to break even. Then what did you do? Nothing. How much money did you make? I'll either make I'll either make $0 or I'm going to make $250. Okay? Because it's going to go here or you're going to get knocked out. That's where I want to get you. The probability is low based on what's been happening the last month or two. But if you were going to do it, that's how you do it right. Because you get the full Monty. You're not trying to do it to catch $40 more. Like you're taking a mediocre trade to pick up $40. I'd rather you get this higher probability trade. Yes, it's bullish in the bearish mode. So it's sort of like long-term long with short-term short. So like in that scenario, I think you should take the better trade and then just be done with it. Zero or hero, okay? So now you're risking like $3 because you're at -3. So let's not call it zero. You'll either lose $3 or make $250. How do you feel about that? Okay, we talked about risk-reward ratio, right? Wasn't that bears also taking profit? Well, Alejandro, we don't know that at that time. And that's not where bears take profit either. Okay, did a bear target monthly M2? No. What's the target for a bear? I want to raise my chair. Ugh. Ooh, that's better. Ooh, look at me. Boss mode. M1. Yeah, so when you're OOP and they front run and you hit the target early in the month, then yeah, there's profit taking. So that's how you set up a counter trend. So that's all in the training course, of course. Of course, of course. Okay? Yeah. Okay? So, yeah, so is this bears taking profit? No. But that's why the probability is still very high that this comes down, especially, so like, let's go back to like what you know, or at least what you've been taught about this, okay? Okay. Bears are supposed to sell here, and they're supposed to target M1. And we are in this measure of the last couple months of trading, it is bearish. So what we do know is if you were a bear in a bearish market, this is what has been planned. Okay? The first chance was here. This was plan A. The other one was plan B. You have to understand. You have to understand that's the basis of everything. You're trying to figure out what bears are going to do because they rule the world. They rule the market. It's a bearish market. So you have to understand swing trading from the point of view that this is a sell or this is a sell. So do you want to buy near those prices? I would suggest no. So you got to buy away from those prices. Okay? You see? Okay? So no, that was not bears taking profit. Yet. Cool, right? Hey, my pleasure, Alejandro. Or should I say Mr. Foley? Bum 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 ba-dum bum 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 ba-dum bum 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 ba-dum bum 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 bum. Right? I remember learning how to play that on the piano. Okay. Bears will wait for the big little Red Riding Hood candle. Big little Red Riding Hood candle. Very poetic. Yeah, so going back to what I think is likely has happened for the better traders is they've already moved their stops. Man, it's supposed to be black. Okay, they've already moved their stops to break even. You see that? As far as I'm concerned, like an institutional trader is already done. They're done. They're done. Bears sold where bears sell, bulls buy where bulls buy, and then everybody else trades in the middle. Okay? Once again, it leads to mediocrity for most. Okay? So there's a tiny little bit of hope, but I don't even look at it as hope. Like going back to this entry that we have here, it's not that it's hope, it's that if it doesn't do that, then it's dead. Okay? You see? So maybe that's the base of your trade. It has to go up if it's going to go up. What do you think? Good lesson? Are you willing to click the thumbs up button for that? Remember, you can go back to the video, right, on how to trade oil. If you didn't watch it, I'll bring it up for you now. YouTube.com/Forex.Today. I'll get you the link. Oh, here we go. How to trade oil. Okay. Oh, you know what else I want to do? Ooh, an ad. Who's it going to be? Do I get paid double?
Investor, I have big news. In the last 12 months, I bought.
Ty's done so well for himself. It's crazy. All right. Oh, I killed it. I just needed this. Okay. Oh, you know what else I want to do? Probably should have done it the other one too. There you go. Be true. Because that gives me 2 targets, right? Shoot, so I'm going to have to do the other one again. So, anyways, templates, save template. Well, it says how and when Forex traders should trade crude oil, WTI, oil trading strategy. I think you should be able to find that. I forgot the other target. So, bullish mode, monthly, with midpoints, okay? Change, so it's got my targets. Maybe great. Click the thumbs up button too. Oh, I removed it. Save template. So maybe give it a like there as well if you could, please. Replace the old one we just made a minute ago. So less than half the people in today's webinar have clicked like. Some of you guys might be saying, well, Wayne. Less than half, really. Sorry I let you down. I apologize. Okay. Next challenge, right here. So you watch this around 1850, there'll be a new challenge. Yeah, this is Inception. I was just wondering if like you get double credit, because anyways. All right. All right. The Bitcoin. So we talked about this yesterday. And we're sort of stuck. It's the same thing. Like, it's a dangerous place to buy. Thanks, Dwayne. Hey, Dwayne, did you have you completed the challenge yet? The what is it? Stage 1, level 1, level 1. Did you complete it? You're in phase 2. So, how many pips did you get on the final exam? The 10,000 pips. Did you do better than 10,000 pips? $20,000 pips. Oh, okay. That's a good month, bro. Ah, that's a good month. Yeah. It's an eye opener, isn't it? Yeah, new trader, that's not going to be good for me on the short run, for sure. Such an eye opener, isn't it? Where you're like, you've been gunning for 200 pips, right? You've been gunning your whole, like, if I can make 200 or 300 pips a month, I got it all figured out. And then one day I show up and I'm like, look, you should be making a couple of thousand pips every month. You're like, a couple of thousand pips a month? Wayne, that's insane. And then all of a sudden you get to this point where you knock out 20,000 pips in 1 month and you're like, holy shite. Right? You're like, you don't know until you know, but once you know, you can't go back. Right? You've taken the pill and you've woken up and you're in a new world. Sammo, everybody in my elite professional track of training has done that. The minimum is 10,000 pips in the month. Minimum. But everybody beats the 10,000. So it's funny because you think 10,000 is unachievable, and then everyone that goes through it makes more than that. And so you have to go through this mental shift, right? So anyways, you'll get there one day. No. If the swing trading is not the professional course, you got to wait for that. I would say hang with me for a year before you even move over there, because there's very little love in the professional track, because you lose money, your clients don't love you. You understand that? So if you don't know how to trade, it's not a very good place to show up, because it's tough and it's designed to be tough. Okay? So I would spend at least a year learning how to trade with me in the swing trading group, where you're learning how to knock down, 1, 2, 3, 400 pips at a time, and and I do a lot of sort of mental work as well and fundamental work as well. So it's good to go through that. It's more than a swing trading group, but that's what we call it right now. But once you get from there, then you are qualified to try out for the other group. And one of the things you have to do to try out is under examination. Like, we're tracking every trade you do in that situation. And if you can't even make 10,000 pips that month, then forget it. We're not interested. Come back to my group. All right. So for everyone that has gone to the professional group, tried out, and either didn't like it or couldn't do it or didn't have the time or focus or whatever may be the case, it doesn't matter. You're welcome to come back to the swing trading group. Okay. Lucas got the 18,000. Hey, not bad, right? Lucas is like, it's all right. It's all right. Nothing to be ashamed about, right? But it's just funny. You're like, yeah, only 18,000. That's all right. That's good. Right? And again, to the other people in the chat, they're just like, it's unbelievable. They don't believe you. They don't believe you. Oh, it's hardly anything. Oh my God. It's hardly anything. 130 bucks a month. It's nothing. Okay? It's nothing. All right. Yeah, the issue isn't the money. Okay. All right. So we'll look at that. Like, this is a danger zone. It's this idea that we have already talked about. Like, if you were going to buy it, you would have bought it down here, and you don't really want to see a double bottom, right? So I'd be cautious. Clearly a rejection at 20,000, right? So I don't know the psychology of this. Because remember, I understand that in a risk-on scenario, people would buy Bitcoin. But, you know, how bad is the risk off? And some of this is like, is it truly liquid? Like, I know you can buy it whenever you want. I guess if everyone's buying, then you could sell. But if everyone's selling, like, I don't know, like, and you can't just spend the Bitcoin easily. So I don't know if it can be as down as it can be up. You know what I mean? What's my plan for gold now? I just talked about that for 45 minutes. So we're done with gold. Okay. And then Brett, the same thing. All right, cool. So we'll move on.com. Check the indices again. Yeah. I mean, the only thing to be happy about is Euro is also strong. One of the things we talked about as far as relative strength, and I think it was yesterday, I said, look, if you're gonna trade Swissy, you're probably going to be pound Swissy short, right? But we hit the target, so is that the end? Well, let's talk about it. So when you learn how to swing trade, you know this is the exact price to sell, and this is your conservative target for the month, and this is your aggressive. Isn't that nice, guys? Okay, so let's go back to how I've been explaining this. I think it was on gold, right? This is where bulls buy. This is where bears sell. If you don't know if you're a bull or a bear, you don't know how to trade. You should stop. Okay, great. So all of that's predefined. You knew it in November. Okay, great. So bears would have sold here, and they were done for the entire month. Do they know they're going to make money in that situation? No, they think they will, but they don't know. And then so price comes down, and check this out. This is the best price a bull expected. So somebody's going to make money here, but nobody's going to lose. You have to start to understand that this is a symbiotic relationship between bulls and bears and not necessarily zero sum. It's zero sum for people trading in the middle that don't know what they're doing. So in this case, one of these parties will make money and the other one will not lose money. So these guys planned this and these guys planned this. Which one's going to make money? Well, at that time, you don't know. But both of them have plenty of time to move their stops to break even. Okay? bears win the battle, and you get this kind of move here. You get this kind of move. Okay? So, the first sell is here. The second sell is here. Okay? That's how you trade. Okay? So when you look at it like that, what's all this other noise that people trade? Midpoint's irrelevant. I'm not really interested in the midpoint unless we are in a strong trend. Okay? Okay? So for example, bulls and bears care about the central pivot, but give it more weight depending on the conditions of the trend. But if they both care, then it's less relevant than only a bear sell, right? Like only bears can sell here, right? Bears would never sell here, otherwise they really just don't know how to trade. They just don't know, okay? So this is only bears selling. And if a bull bought there, they don't know what they're doing. Only bulls buy here, and if a bear sold down there, they don't know what they're doing, and they're not big enough to be relevant anyways. Okay? And would a bull buy here at this role reversal? Only bulls that don't know what they're doing. And the cool thing is, right? Anyways, and then down here. So once you start to do the analysis properly, it's pretty clear. So now you're like, oh, Wayne, but that's all hindsight. Okay, let's deal with this. Okay, great. Is this a good place to sell? Let's do foresight. Let's talk about the future now. Oh, Wayne, it's so easy when you do it all backward looking. Everything you do is backward looking. Okay. Is this a good place to sell? No, only if you don't know what you're doing. Done. Should you buy here? No. No, you probably shouldn't buy it here either. Cool. Okay. Now, if you got something like this, could you buy it down here? Yeah, you could. It's not a great trade, but you could. Okay. This area here is a target, not an entry. Okay? Now, if you did take it, it's such a mediocre trade that I would jam my stop and I would plan on being in it for 5 weeks. Otherwise, it's just not even interesting enough or valuable enough to take the risk. So if you thought you could do this, then okay, then I would jam my stop here and say I'm in it forever or something. Like I'd have to get 300 pips minimum. I typically go for 333. Okay? And otherwise, it's just not interesting enough to even take that kind of risk. I'd rather take a good trade than that trade. See, this is a good trade. This is a good trade. This is like after the fact. You're betting on a reversal now. Why would it reverse? And you're like, well, Wayne, it played itself out. It hit the target. Yeah, well, it's, I mean, I guess you could say it's early in the month. Yeah, okay. So then you would set it up as a counter. Okay. So then you do this, but you're treating this year end like it's any other month. So I don't know. See, like this is a good trade. You see this? Let me be very specific. This spot right here on the first day of November. Okay. That's a good trade. This is very, very, very obviously a counter trend trade. Okay. Marina, do I pay attention to wicks and particular candles without wicks? Yes and no is the honest answer, and I'll explain why. So in the situation that I was just showing, so let's use that one. I see this as a counter trend setup. So that's going to supersede like everything else right off the bat. That filter, right? So the wicks or no wicks, dojis, moving average crossovers, oscillators, it doesn't, I mean, they all matter. It all matters, but they're all confirming what I already believe. So it's not because of the wicks. Now, wicks show you profit taking and all that kind of stuff, right? Exits, whether it's an exit one way or an exit the other way, they show exits. But if I already expect the exit to happen, then I already assume the wick. So do I do it because of the wick? I've done it in the wick. Now the ones that don't have wicks show me, it shows me conviction, right? So the way to get no wick would be like this. Okay, so you got a candle like this. Okay, here's the opening price, and here's the closing price. I can give it a color too if you want. Okay, so here's our color now. Okay, so what does this tell me? It tells me that bulls bought it on the first second of that candle, and they continue buying it until the last second of the candle. Cool. So most of the time, that's going to be a good thing if I'm a bull, unless you get to a target. So let's now add a layer to this. This is all good until you hit, oops, that's too big. Hang on. Let's redraw this, and we'll do a line. Okay, and we'll call this monthly R2. Okay, what do I do in this situation? Exit. So I understand it's very bullish, but then I know all the bulls are, or I assume, and how about this? Statistically speaking, it's highly probable that everyone in this will get out. So does this mean it's extra strong? Yes, but then in the context of something else, it will, right? So sometimes it'll matter more than others, right? This is what I'm trying to get to. Like, do I pay attention? Yes. Are there situations where I'll override how bullish or bearish it is? Do the wicks matter? Yeah, for example, we could now have something like this could happen next, let's say. How much does this matter? That has to be a little fatter. Okay, does this matter? Yeah, because it shows we went above, and then all the orders got filled, and now, right, we opened here, went higher. Actually, this would have to be, it's all right. So okay, so yes, that would matter if I was looking to sell that, okay? But I don't sell that. That's not a situation then that I would sell. I'm trying to be the one that's in the green candle exiting at R2. And then after I exit, this happens because I exited inside the wick. So like, does it matter and all that? Yes, it matters. Yes, it definitely matters. But the basis of what I'm trying to do is to be in the green move and exit before the hanging man. Not do it because of the hanging man, or not do it because of the wick, or not do something because there isn't. But those things are definitely important, and it's a lot of information too. Right? There's a lot of information there that could be good. So like you can add to this now, and like, for example, oops, I have to make that one skinny. Okay, that's different as well, isn't it? Because this tells me it went lower and people bought it. It went higher and people sold it. Or it went lower and bulls bought it back. And then, or this went, well, it would have to be here. So it went up, bulls took profit, then it went down and bulls bought it back. Okay? Which is a different story than this. All I know is bulls got out and maybe bears started selling. So yeah, do the wicks matter? Yeah, they changed the story. Okay. Joseph, I don't want to look at EuroCAD. No. The last time I looked, they were both, right? They were both strong. Yeah, so yeah, they certainly matter. I think they matter more to me, Marina, in situations of scalping, let's say. Okay? If I'm on a 1 minute, 3 minute, 5 minute chart in conjunction with a 15 minute, and I got plans, and I was looking for an entry, not an exit, yeah, it would probably matter more. Would I sell just because of that? What I'm looking at here? Yeah, I definitely could, because I see the profit taking, and it ended bearish. Right? So I'm thinking of like the years where I did a lot of short-term trades. Yeah. Now that I'm, more, let's say longer-term focused, even though I enter on a 5 minute chart, in this situation, I'd be exiting on a 5 minute chart, not entering on a 5 minute chart. So it changes the way that I'm using this information. But if I was looking to scalp short off the monthly R2, that's pretty obvious. And yes, that would probably put me short. But I think you asked me, right? So me personally, yes, I would sell off of that if I was scalping, but I don't tend to do that anymore, or very rarely. And I'm much more exiting in this situation and then not going short from long. So yeah, but it certainly does matter. The reason you use candles is it tells you that kind of information. Otherwise, if you didn't like candles, you'd just use price lines, right? So it matters. So you remember when you're putting all this together in candles, guys, you have you have your open, your high, your low, and your close. Okay, open, let's say. I don't know if I did this right, but anyways, open, high, low, and close. Okay. Is this bullish or bearish? How about the story on M4? Is it the same as R2? Well, it's resistance. It's a target. Okay, new trader. So if I hit my target, I'll be out before the red candle. And if it's an entry, I have to wait for the red candle to confirm. Okay, is this bullish or bearish, by the way? Okay, let's talk through it. I'll use blue as a color because it's neutral. So we were here, it went up, then it came back down, then it made a low, and then it closed here. So the color of this candle is red. Okay. Okay. That's what it would look like. If you were using just a line, okay, you're using, instead of a candle, you were using a line, then what would happen is this. I guess that should have been black. Let's do it this way. This is black. Okay. That's the price at that time. Is that bullish or bearish? We don't know. That's why they invented this. And they're like, okay, well, I want to know the open, the high. So now we know it went up for a while. Okay. And I want to know the low. Okay, so there was quite a bit of range. So it was up, it was down. So this is not a consistent candle. It's all over the place. And we also know it ended the period at a lower price than it started. So it's helpful. Now, if this was at resistance on top of that, then it tells quite a story. Oops. Anyways, okay. Then it tells, right? So it's relevant information at the right price. You have to put it in context to something, okay? Was that helpful to anybody? Like, I know Morena knows candles, so she's just asking me, like, what are the candles and the wicks and what does this mean and all that kind of stuff. So I know she knows. But is it, in general, a good review of what a candle is actually telling you? Because ultimately you have to read into the psychology of what's going on. Okay? So now, for example, okay, what's going on here? Okay, everybody sold it hard. Why? Everyone was targeting M1. That's how you're supposed to trade. Okay? Right? Then what happened? Okay? Orders started getting filled. And now we have a green candle. So in the last 12 hours, we haven't really made a lower low. It's been extremely bearish. But for some reason, it stopped being bearish. Okay? So imagine this now, guys, because you have an advantage over a lot of market participants. And let me show you. Okay? Cool. So now, going back to these candles, as Morena was saying, how important are the wicks and all this kind of stuff. Imagine now you already knew the market was going to reverse at exactly that price. Would it change your behavior to have that assumption? Okay, most market participants don't know this yet. They don't know that it's going to flip here. So wouldn't it just be nice? So this is what I was saying. Do I counter trend this? No, but this is clearly a downtrend. Okay, down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 out. But other people might be, well, what about the next up, up, sell? Well, go ahead, it's yours. You take it, boy. You do you. Okay? Now, this could work for sure, but all I know is this is an out. Okay? Do I need to wait for this wick? No, I got out in the wick. I created the wick. Okay? You see what I mean? And that was my original answer. I'm out on the wick, not because of the wick. I'm out in the wick. I created the wick. That wick is mine. Okay, anyways. Okay. And yes, you could counter trend this, but I would rather, I'd rather see what's going on here. Okay, because there is a higher probability that we do this. I will wait, right? I'll wait. That's why, like this, all this information is really good. So anyone else is just doing price action, okay? They're going to do this. What's the problem? A, they're not going to get out here. B, they're going to add another one. And then C, the stops on these other ones are up here, right? So what's going to happen? A, they don't take profit and get out of all these trades. Okay. B, they lose money here. C, they get knocked out here. So they've lost, let's say, this trade and this trade remain open and this trade. Okay, they could have taken profit on all those and this one, but they didn't. Okay, so now this turns into a break-even trade. Okay, this trade here turns into a loss. And what's now happened? Now this is a break-even. Oh, we counted that, right? That's the break-even. And then they've given up. So now I got to redraw this. They're going to only have this amount of profit, and they're only going to have this amount of profit. Okay, so now I got to redraw this. And so they have a loss, a break even, and they've given away 2/3 of their open profit. Why? Because they didn't know that this was going to be the bottom ahead of time. And you do. You see the difference? Holy crap, that's a big difference, right? But it's only really one trade. Well, one loser giving up the the opportunity that turned into a break even, plus the floating profit, 60% of the floating profit. So you gave up about 70% of your profit because you didn't know the bottom was there before it happened. You know, I know, but many, 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 many market participants don't know that before it happens. And I don't know. Am I supposed to feel bad for them? I don't know. Okay. Cool, right? So I'll tell you what. I'm going to answer 2 more questions, but only on the Twitch stream. Ha ha ha! Wee wee wee! Okay. So if you got a question, I'm only looking at, you have to be on Twitch to ask me the next question, the next 2 questions. Boo 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 boo, boo 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 boo, boo 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 boo, boom 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 boom. Yeah, you have to just buy it over again, Dr. Age. Cost you an extra $5. See you, Joe Moo. Yeah, it's just not set up to otherwise. Okay. All right, that's a good question. I won't even count that as a question. If USD is going to be weak, should I borrow USD? I'm borrowing as much dollars as I possibly can. I'm talking to multiple bankers at the same time doing different deals, all based on US dollars. Because think about it, 5 years from now, I have to pay back in cheaper dollars. Okay? So just accessing liquidity, you make money. You have a small account. What should you focus on? Longer term trades. Also, you should get a second job. You should work nights and weekends. You should go through your house and your garage and your storage units and sell everything you don't need. Okay? Okay? That's how you do it. What's up, Joey India? Oh, you get unemployment checks right now? Awesome. That means you have tons of time. You need to have 2 or 3 hustles where you get cash because you don't want to lose your unemployment. So you got to hustle. Dude, I'm an entrepreneur. I can make money at all time, anytime, as long as I can walk, and probably even then I probably could still find a way to hustle for money. I've made money my whole entire life. I grew up dirt poor, right? And I had an Italian mountain bike. When mountain bikes first came out, I was the first kid in the neighborhood with a mountain bike. Everyone still had BMXs. Mine was imported from Italy. I had gold pens and pencils at school, right? I went to rough schools in bad neighborhoods, and I had gold pens and pencils because I had jobs. I had not 1 newspaper route, but 2 newspaper routes. So I did that in the morning, and both routes had to be done before 7 a.m. And by the way, winter in Canada, it's at 5:30 in the morning, it's -30, -40 Celsius. I'd get that done, boom, I made money, right? At night, I worked professional hockey games, right? I wasn't even legally allowed to work yet because I was so young, but I worked nights and made lots of money. Okay? Then I would shovel sidewalks. Anything. Rake your lawn, right? Shovel your driveway. My mother used to take me to like flea markets and stuff where you can sell stuff, and all you do is go and buy someone else's stuff and then go take it to your table and sell it for more. So it's just like, okay, you want a job, but you live in a small town. So I lived in a town of one street light. Okay. Right? The most exciting thing to do in the town I grew up in is alcoholism and teen pregnancies. Okay? So the thing is, I'm an entrepreneur. I can make money in that situation. You got to always find your hustle. You got to move. You got to move. And then later on, when I got into like high-tech startups in the Silicon Valley and stuff, everyone else is sort of sitting around going, well, oh my God, now that we have all this free money from the venture capitalists, we can just buy a whole bunch of advertising and money is just going to roll in. I'm like, no. You got to hustle. Money never rolls in. Right? So I grew a company of $0 working out of an apartment building in the Russian district of San Francisco. 3 years later, we're making $1 million a month with no advertising, no venture capitalists. You just got to hustle and make the magic happen. From my point of view, right? There's always something. There's got to be something. There's got to be something. And if you can figure that out, then you know how to hustle in Forex. Because you know that whatever you did to make your money to start your Forex account, Forex has got to be easier than that. So if you can deal with life, and life is very difficult. If you can deal with life and make magic happen, you can make the impossible happen, then Forex is going to be easy because you already are better than 95% of people that can't do it. And that's all you need for Forex, by the way. Think of it that way. All you need to do is out hustle 95% of people, but 95% of people don't have what it takes. They're waiting for the advertising to bring in sales. It doesn't work that way. You know, you got to pick up the phone, and if you own a small startup, pick up the phone and make money rain. Marketing and advertising, making little binders, that's not how to do it. Get out of the desk, get on the phone, hit the streets, get out into the crowd, but you got to make it happen. Then you go to Forex and you're like, all I have to do is buy or sell. And in a downtrend, typically you sell. And in an uptrend, typically you buy. You know what I mean? Like, that's got to be easier than what life presents. Because, you know, life, it doesn't show, it's not fair. Life is terribly unfair. Hey man, I'm really smart and I'm really eager and I'm really focused and I'm a hard worker and I want to work for you. We don't hire people like you. Do you think that happens in the real world? We don't like people like you. You don't fit our profile. Your daddy wasn't the right daddy. You don't live in the right neighborhood. You're the wrong color. You're the wrong religion. You're the wrong age. You're the wrong something. And you got to deal with that. Forex, sell high in a downtrend. Buy low in an uptrend. You can't tell me that's more difficult than dealing with the real world. Okay? So, look at this as your way out. I want a job, but I live in a small town. I want to be a Forex trader, but I don't have much money. Figure it out. You can't figure it out, then it ain't going to work. It ain't going to happen. But if you're the type of person that can make it work, make the impossible possible, Forex is achievable. Because you have more tenacity and more fortitude and whatever magic is required for success, you have more of it than 95% of people. And you'll do fine. You'll do really fine because you'll appreciate what you have in front of you. You will appreciate the opportunity, not just to make money. That's the most boring part of the thing about Forex. Okay? You will achieve life goals and dreams that you don't even have right now. You can't even imagine your life 25 years from now, if you're blessed to be young on top of all of this. You can't even imagine how amazing your life's going to be. You can't even dream that yet because you're stuck in your reality. So change your reality. Okay? But if you can do it, you will not let Forex slip through your fingers. You will work day and night because you appreciate the opportunity in front of you. Right? Rich, spoiled kids that have been taught their whole life that if they just want it, it will somehow arrive. I want to be a Forex trader, but I don't have the time. I don't want to do the work. I don't like downloading things and reading them. But I should be super rich and successful because I want it. That don't work, son. Okay? How many people here have seen the little town where I said at the age of 17, I have to get the hell out of here? I want to change the world and live a completely different life. How many people have seen that presentation? Boarded up buildings. Complete cultural, intellectual, and financial isolation. So I know we all got it tough. I'm not saying I got it worse than you might have, but if you see where I come from, you're like, holy shite. That's one definition of nothing. Where was I when I made that decision? I was nowhere. Okay? Fast forward 5 or 6 years, I'm at a board meeting on Wall Street at a high-powered law firm wearing my one suit, right? And I'm on the board of directors of the corporation leading thousands of people, and I'm a contemporary with George Soros. 5 years can change everything. It's unbelievable. You don't believe me. And maybe it's 7 years. I think I told the story to my wife, and she's like, I think it was 7 years. Okay, 7 years. I changed my entire world, changed my entire life path. Okay, it took me 7 years, but I'm sitting on a board of directors with George Soros, managing thousands of people. I lived in a city with less people than I managed. Okay? I still think I was less than 21 though. So it must have been 5 years. I think I might be accurate. But my wife's never wrong. So anyways, what I'm trying to get to is you can do this. You don't have any money? Get some money. I live in a small town. I don't have a job. Then you have to find a way. The best way is to provide value to somebody. Help somebody. And have them pay you because you offered some value, a product, a service, right? Offering somebody value is the secret to success, okay? Offer $1,000 of value and charge $99, you'll probably find somebody. right? And do it for long periods of time. Okay? Offer great value over long periods of time. Because that's what you're going to do for your Forex clients. And you're going to be able to say that you started in a small town with no money. And the one thing you know is value creation, right? And technical fundamental analysis, macroeconomics, central banking policy. You've mastered that. And that's the value you offer to somebody that has money. It's amazing, right? How many people have money? There's lots and lots and lots and lots and lots and lots of people that have money. Most of them are, they've inherited money from dad or mom, and they started a business. So most people with some levels of money, they're small business owners. What do? Whether it's a product or a service, they did exactly what I just recommended to you. Find a way to create some level of value to other people, to a customer base, to an audience. And for that value, you charge money. It's the best way to make money. Offer somebody value. So so now imagine you own an auto body shop or an aluminum roofing company, or you have an app that you sell in an app store. Okay, you've made something that's valuable to somebody else. And the size of the problem you solve will dictate the amount of money you make, not necessarily what you're worth, right? But how hard you work. How hard you work is irrelevant because the other people don't know and they don't care. The value that you offer, so you manage somebody's life savings, guess what? You'll get paid more than washing windows on the top of a skyscraper. You're like, well, dude, it's 77 stories tall. Nobody wants to go out there. You're like, yeah, well, I can get through today with dirty windows, right? But so they don't make much money. Nobody wants to do it. They still don't make a lot of money. But if you manage someone's life savings, they'll pay you a lot because, oh my God, it's my life savings. Don't lose it. It's so valuable to me. Okay? So you can offer that stuff. But think about it. If you own a successful auto body shop, or you own aluminum roofing business, or you sell apps on app stores, does it mean you understand money, finance, economics, and accurately be able to predict the future for the stock market, for the bond market, for the currency markets, for the commodity markets, and string them together over years and decades, adjusting as conditions change? Are they able to do that? These are very successful people, and they're probably smart, and they're probably hard workers. But what does all that mean? Well, they're smart enough to start their own business instead of working for somebody. That's the first thing. The second thing is they're probably hard workers, but hard workers means they spend all their time running their business, offering their customers value, collecting money, but there's no time after. They need somebody like you to manage their wealth. It's not all billionaires that you're going to be chasing down, like your helicopter is landing right behind their helicopter and you're a helicopter chaser, right? Wait. I want to manage your money, right? Most people are going to be the people around you and near you. And they're most likely small business owners or children that inherited money from small business owners. But the thing is, they need you to manage their money. And you need to offer them that value, and they'll pay you handsomely for it because they don't know anything about it, but they know their money is precious to them. That's how you do it. Isn't that cool? Hey. Okay. So I'm spent. That's my date. That's the end of the webinar. Thank you for being here. Thank you for being a customer of tradersway.com. Thank you for being a part of the Forex.Today YouTube community, or the Forex.Today Twitch community, or the Forex.Today Facebook community. Thank you for everything that you do. Is it going to be off the charts? I don't know. I don't really make the determination till Sunday. Depends. Depends what's going on. Ultimately, it depends on the weather. Okay? But thank you for the hard work. I hope you see this as educational and inspirational. I try to give you everything I do in a positive manner, trying to give you positive energy. I'm trying to inspire you. There's nothing holding you back except probably yourself. Right? You can do this. Okay? There's always just something. It's time that's usually, you will grow over time. Okay? You will grow, but I know you can do this. This is something that's in your wheelhouse. This is the best small business you could possibly start. And I know that because I was a venture capitalist, and before that I helped many people raise millions of dollars. And then I've started and created companies that made millions of dollars. Right? And I've managed hundreds of people directly, thousands of people indirectly. And I'm saying this is the best. This is the best thing. This is the best thing there is, ever was, and ever is going to be. And like I said, nobody gives two hoots who you are and where you come from. You got this. This is you. So if you're great, you do you. Because you can do this. You can be great. So peace on earth. May the pips be with you. May your profits be above average. See you on Monday, everyone.